What's up guys, I'm Kenny, and in today's episode, I want to break down the 10 best stocks that I'm looking to buy in 2021. Now this episode is going to be unlike my other videos where I do in-depth analysis on a single company, looking deep into their valuation, financials, long-term future. What I want to do in this episode is do it more like a lightning round and kind of just go quickly over the stocks that I'm looking at and I'm hoping to buy. Now all the companies on this list I believe have multi-bagger potential in the next couple years, so I'm really looking forward to breaking down this video for you guys. And without further ado, let's dive right into it. So I'm going to be categorizing this list from the largest market cap all the way to the smallest market cap. And in other words, it kind of means the safest investments at first all the way down to the most speculative investments. So the first company I have on this list is going to be Salesforce, ticker symbol CRM. Now Salesforce, as we all know, is a customer relationship management software, and they have been around for a very long time. Now, Salesforce is headquartered in San Francisco, and it's led by a well-known Mark Benioff, who's known to be one of the best CEOs out right now. Now, Salesforce is known to be the #1 CRM platform, and for good reason. A lot of the Fortune 500 companies use the Salesforce software and platform to be able to track all their different customers and for their sales team to continue to hit different quotas. So a few years ago, it acquired Tableau for about $15 billion, and it just recently acquired Slack for about $30 billion. Salesforce is becoming the giant that is gobbling up all these other companies and beginning to integrate it into its platform. And I believe that since it already has a really wide base of its customers and it's already integrated with a bunch of different companies, these other apps and other integrations would only bolster its value and business proposition. Now, Salesforce is also benefiting from the pandemic as the stay-at-home order has forced many different businesses to go fully remote. And I believe this is a long-term trend that will only continue to stay. And Salesforce is really at the forefront of these different sales teams to continue to reach their goals. Now, Salesforce is currently sitting at a $200 billion market cap, and its PE ratio is about 57. Now, their PE ratio is pretty high. However, their earnings isn't that high, so I wouldn't really look into this all that much. We can see that it shot up back in August as it completely surpassed expectations, shooting up from about 200 all the way up to 270. And ever since that, it's been trading down sideways. So we can see in late November, Salesforce actually dropped off pretty hard and sold off, as that's when they announced their acquisition of Slack. Now, after that, it's been trading around its range of about 220, and this is where I've been picking up quite a bit of shares. Now, even at these prices, I think Salesforce is actually still undervalued. I think the community around Salesforce and the kind of business value that it gives towards these different sales companies is essential. And since it's a software company, they're on a recurring revenue basis model, and I don't see customers churning away from this. What I see is only more businesses coming to Salesforce and continuing to spend with them, as they have many different key applications such as their own platform, Salesforce, Tableau, and with acquisition of Work, I think it'll do really well far into the future. Now, its price of sales is about $10, and its quarterly revenue growth is about 20%. Now, we can see through their financials that their annual top-line revenue growth is increasing pretty steadily at about 30%. Now, its earnings is a little low. However, that's because they have been spending a lot of money in their acquisitions. So we can see in the past 4 quarters, it's been going up a little slightly. However, I do think these long-term tailwinds will continue to be there, and Salesforce will be a long-term winner. Okay, and up next, we have Square. Now, I'm sure many of you already know about Square, but for those of you who don't, Square is essentially the business that provides all the different tools for these small and medium-sized businesses to run. Now, what Square is really known for is their POS system, or their point of sale system, which is essentially a way for them to execute transactions for their business. Now, essentially what the product is a digital cash register where the cashier is able to take digital payments as well as credit card payments. And it's not only that, but it gives them the back end to be able to look at exactly what's happening and all the analytics behind all their sales. Now, this actually isn't the only product that Square offers. Square actually offers another service called Cash App. Now, for those of you who don't know, Cash App is a payment application where you can download on your mobile phone and where you can send payments to different people, different businesses. And just recently, Cash App actually became a brokerage where you're actually able to buy and sell stocks, and you're actually able to invest in cryptocurrencies if you want to. Now, Square has seen an insane run up from its March lows earlier this year, we can see that it was about $38, which is kind of crazy, and it's shot up all the way to about $217 today. Now, it's sitting at about $100 billion market cap, and we can see that its price to earnings ratio is 330. However, we shouldn't really look into that because they just started turning a profit. Now, we can just look right off the bat with their financials that they've seen pretty robust top-line revenue growth. I would say they're growing about 40 to 50% year on year. We can look at their quarterly revenue growth, and just in its last quarter, it's seen a jump from about 1.92 billion all the way to 3 billion. And I think that's what's really been driving the stock in the past few months, as they've seen a huge demand because of this pandemic. Now, if we take a look into their statistics, we can see that their price of sales is 14, and their quarterly revenue growth rate is 140%. Now, that's kind of nuts, honestly, the kind of growth rate that they've been seeing in this past quarter, and that's really what's been driving the stock. Now, at a price of sales about 14, that's really not that bad compared to a lot of these other high-flying software companies. I think since they have two different products, both in their point of sale system as well as Cash App, which is doing really well right now, they're really riding the waves of cryptocurrency and this stay-at-home digitization. Now, they're really benefiting from this pandemic as a lot more people are doing digital payments, and they're actually investing into cryptocurrency, which is doing really well. I think Square is really positioning itself to be the fintech giant far into the future. The younger generation would actually flock more towards Square as opposed to go to traditional banks. So in my beliefs, I think investing in Square is really a big bet on fintech in the future. Okay, up next, you know we had to do it. It's Palantir. Now, Palantir has been one of my favorite stocks to invest in 2020, and I think it has a really bright future ahead of it. So Palantir, to put it simply, is a big data analytics company. They provide two different products, Gotham and Foundry. And Gotham is more so for needle in a haystack analysis. It's identifying different patterns within a data set, and that's used more for government agencies. Now, on the other side of things, for the commercial sector, they have a product called Foundry, which is essentially a central operating system for different businesses to ingest data and to gain actual insights with their data. Palantir is really riding this wave of big data analytics, and obviously it's done really well in the past couple months. The main reason is because they've been securing a lot of contracts with very reputable companies and organizations, such as the Food and Drug Administration, as well as the US Army. Now, just in their last quarter, they reported 52% revenue growth, which is very strong for a company already of this size. Now, I just recently made an in-depth analysis video about a couple days ago, breaking down exactly what Palantir is all about. It's financials, valuation, long-term future. So if you guys are interested in that, I'm going to go ahead and link that in the top right corner. Now, Palantir software has shown to be critical in 2020 as a lot of different organizations are using their software to be able to track the spread of COVID. I think Palantir has a really bright future as it's hitting on both different fronts. On the government side, which is really their cash cow, signing different long-term partnerships with a whole bunch of different government agencies, as well as diversifying into the commercial sector. And I think as more and more companies and agencies partner with Palantir, it'll not only bolster their brand and help them become more well-known. So I believe not only will it be able to bolster their brand and their reputation, but it'll really go a long ways in signing other contracts as more businesses realize the kind of value that their software brings. And up next, we have Unity Software. Now, if you guys have stuck around with me, you know that I just recently broke down Unity Software, so I'll go ahead and link it in the top right-hand corner. But to put it simply, Unity is the game platform that creators are using to be able to develop their games. Now, Unity is primarily focused on the gaming industry. However, they're trying to differentiate into other industries such as automotive and industrial. And I believe that if they do become one of the leading platforms for not only gaming, but these other platforms, I think they'll do really well. Now, their only competition is Epic's Unreal Engine. However, Unity actually has more than 50% of the market share in the gaming industry. So as long as they continue to develop as long as Unity is able to continue to execute on its top line growth and it's able to expand into these other industries, I think it'll do really well into the future. Now, Unity is currently sitting at a $42 billion market cap, and it's seen a pretty insane run up from its IPO price, about $70, to where it's standing at right now, about $150. Now, looking at its financials, we can see that they are seeing a pretty substantial increase of their top line revenue. However, they are seeing increasing net losses as well. And we can see in their last quarter, they saw negative earnings about $144 million. That's quite a bit. So I think it's really important to see their top line revenue growth continue to grow at a healthy 30 to 40% and for the negative earnings to reduce over time. Now, I don't expect Unity to become profitable anytime soon. However, I don't like seeing these increasing net losses, so that's definitely something to keep account of. Okay, up next, we have a fan favorite. We have NIO and Xpeng. Now, I just lump these two in the same category as they are both Chinese EV companies. However, I think both of these companies have a long-term future far ahead of it. Now, NIO and Xpeng create electric vehicles that are targeting more of the middle to upper class. And as we all know, China's EV sector is booming right now. China really wants to focus on becoming carbon neutral, and there's been a lot more demand for electric vehicles. Now, we can see in this year alone, NIO and Xpeng have delivered a lot of cars as they've begun ramping up their production. I think as long as NIO and Xpeng are able to continue to grow and deliver a lot of these cars, their stocks will continue to do well. Now, of course, there's a lot of uncertainty with Chinese companies, as well as where the EV market is headed in general. However, I think looking on a long-term basis, China's EV sector will continue to do well, and NIO and Xpeng are really the leaders in this field. Now, NIO is currently sitting at a $77 billion market cap, and we can look at its recent earnings and financials. So, in the past 3 quarters, they've been beating their earnings. And by looking at their annual financials, it tells a pretty ugly story. You can see how bad their earnings and net losses were. However, if we take a deeper dive into exactly this year, they've seen a huge increase in the kind of revenue in the past 2 quarters. Their net losses is also decreasing as well. And as long as they continue to grow and continue to deliver on their top line revenue, and I believe that as long as NIO continues to deliver a lot of cars and reach its targets, I definitely see it become profitable in the near future. Now, Xpeng is the baby brother of NIO. However, they are delivering almost as many cars as NIO is. Now, Xpeng is only sitting at a $31 billion market cap. And by taking a look at their earnings and financials, it tells a very similar story. Now, they just missed their third quarter by 16 cents. However, if you take a dive into the quarterly financials, you can see that just in this quarter alone, they saw about a 300% increase in their revenue. Now, their net losses also increased about 3x as well. However, they are ramping up their production quite significantly. Xpeng also has 2 of their factories that are actually vertically integrated. So I think as long as they are able to deliver on their delivery targets and their revenue, I think they'll do really well. And the investment thesis behind these companies will actually be a lot better as they continue to grow in revenue and their net losses will continue to shrink. Now, obviously, these stocks are a little bit more risky as they are highly valued and they're working in the Chinese market. However, I do think the risk reward is definitely worth it. Okay, next up on the list, we have my personal favorite, Digital Turbine, or ticker symbol APPS. Now, to put it simply, what Digital Turbine offers is an on-device media platform, which helps advertisers be able to advertise on mobile phones. Now, what they do is they preload different apps onto your phone before you even get the phone, allowing for a better user experience, ease of download, and it helps all these advertisers and OEMs to be able to drive revenue for themselves. Now, apps has been on an amazing run from about $3 to $4 back in the low of March to where it's standing at right now, about $57. Now, I made a video about a couple weeks ago. I'll link it in the top right. Breaking down this company in depth and talking about its long-term future. Now, Apps is seeing a very robust revenue growth at over 100% and its earnings growth at over 200%. I think that because of this pandemic and because of these secular tailwinds, I think Apps is really poised to continue to do well far into the future. Now, definitely Apps might seem a little overvalued as it's seen an amazing run. However, I do think Apps is really well positioned as it's become the market leader in this segment in the Android smartphone market. Now, I believe Apps has a monopoly in the space, and I believe as long as this Android smartphone market continues to do well, and apps is able to continue to generate good returns on advertiser spend, I think they're well positioned to do really well far into 2021 as well. Taking a quick look at their past earnings and their financials, we can see that in the past 3 quarters, they've been exceeding expectations. And with their financials, now we can see in 2017 to 2018, they saw increasing revenues, but also increasing net losses as well. Now, I was looking at this company, wasn't too sure about it, and didn't really want to get in. However, in 2019, they continued to grow their revenue and they narrowed their net losses. Now, in 2020, it continued to grow this robust revenue growth and it turned a profit as well. We can dive into the financials for the quarterly, and we can see in the past 2 quarters, they've seen insane growth. Now, the pandemic has really accelerated the technology business, and a lot more people are now using their mobile phone. A lot of these advertisers are understanding this and are spending a lot more money with Digital Turbine. So that's why I think Digital Turbine is well poised to continue to do well far into 2021. Alright, thanks for sticking around, guys. So this video is getting a little long, so I'm going to break it up into 2 different parts. Now, if you guys are interested in the last 5 stocks on this list, which are going to be a little bit more speculative, but have the potential for even greater returns, stick around. Now, if you guys are interested, go ahead and hit that big red subscribe button and hit that bell icon for notifications straight to your inbox. Alright guys, I know 2020 has been a crazy year, but I think there's a lot to look forward to in 2021. Alright guys, I hope you have a happy holidays, and I'll see you in the next video.